Hello everyone, this is Popeye and today we are sailing together to the Old Wild West for the good, the bad and the ugly YouTube series. A video collection where I will evaluate some of the past trade that I took in the previous days in order to check the why, the what and the how behind this trade, in order to pick one good trade, one bad trade and one ugly trade. We will evaluate together this trade to see how I can improve on my trading journey, but also I will try to give you some tips in order to grow in your path to become a profitable trader. So stay with me here in the Wild West for the good, the bad and the ugly YouTube series. As always, big shout out to Bluefin for sponsoring my YouTube channel. Make sure to trade with me on Bluefin. You will find the referral link on the description below. And before moving to the good, the bad and the ugly, also make sure to subscribe to the YouTube channel, and at the end of the video, if you enjoyed, make sure to leave a comment and a like. But without further ado, let's go to see the good, the bad and the ugly. So as a good trade for this week, I picked a FARTCOIN short that is actually still running, but in profit, but still I believe is a good case study as a trade to share and as a good execution from my side. So basically on night time frame, just to see the context, FARTCOIN is basically pretty much downtrending, and somehow once we reach, as you can see, more or less this macro support level, we could say we started to range, still in a sort of downtrend, because you see still we are making lower highs. But somehow the big downtrend that we had over the past month, somehow this one has changed and we started to go sideways. So for two reasons, let's say one, high time frame bearish downtrend, low time frame there is a sort of range. So I started to be interested in this trade, and this is my second attempt. So I took a first short somewhere here and I closed it 10 days ago, I think, at break even, but still I really liked this price action. Basically, very simply, as you can see here from the drawings I put, I see this price action here as a pretty clean range environment, and I clearly see that the price is trying to break above this level with a lot of failures, establishing a further range on the top of the bigger range, and my idea was to short a breakdown back in the initial range, making of this upper little range, sorry if I repeat range a lot of times, a bearish deviation back inside the range. Sorry, I got some flu, so my voice is not 100%. Another concept that I really liked about this trade was always to change time frame to see, especially in the daily, the quantity and the level of rejection we had at this upper level at 0.4. As you can see, all this week price is trying to break above this resistance level somewhere here or above this high. This high has been swept a lot of time on the daily with a constant failure. Price is constantly unable, as you can see here, to break above this level. So people is trying to long breakout here all the time. Price rejected, and then we finally start to break down below. So the context, I think it's pretty clear. The first attempt I think somewhere around this level, then somehow this red level I have here started to become apparently support, so I closed the first trade at break even. Then once we got this further breakdown, I shorted it again, because the price was truly deviating back inside the range. So this is more or less really a standard trade for me. So we have an attempt to break, a failure, a market structure break, a retest, and then price finally start to break further down. To keep it short, because I'm pretty sure you know very well this sort of setup that I'm usually taking, there was also this clear bearish divergence here on RSI on the top, price lacking momentum, starting to break down. And I think it was a very good reading of the context. The setup, first attempt was still good. I would not be stopped out, but I wanted to be a little bit cautious. I think it was weekend, last weekend, yeah, Saturday, something like this, 13th of December. So I attempted again, and we really got a very nice drop. To give you a perspective, this drop is 33%, so a very important drop. We had here a lot of lows unswept, so normally the price, when it starts to break down, it breaks down very, very fast. So the good for this week is this FARTCOIN short. It's still running, but it's a very good trade. I already secured quite a nice profit at around 3R, and you can see zero drawdown, so a very good trade for the past week. The bad trade for this week is PENGU. This week I didn't lose any trade, so I secured some profit for all the trade, but still I'm not really happy on the execution I had on this trade. So the original post about PENGU was that PENGU was trading on this high time frame sort of range. It has this sort of bullish deviation below range low and reclaim, and more locally, I think this chart is the high time frame is this one. So we already had a deviation, price reclaim, and this retesting, let's say, this support level. On low time frame we do have another range, and my idea was to wait for a market structure break, get a test, and then long a potential bounce. The trade itself was, I would say, a very good idea. That's why it's not the ugly, but it's the bad, because as you can see, we did got the market structure break. I was waiting here, I did got my field here. Price started to push higher, it pushed higher to my take profit that I think was somewhere around this level at 1 hour. I took profit, I immediately moved stop loss to break even, luckily so, because otherwise I would be completely stop out before seeing the trade completely going banana to even above my take profit. So this is a bad trade, even though I secured some profit for a few reasons. The very first one, that has nothing to do with technical analysis, is the moment I opened the trade. That was, as you can see, just before New York open. So this fuckery was at around New York opening, and now I don't remember very well. I think there was also some news event. So the timing of this trade was really wrong from my side, because it's a very volatile moment, so it's always better to wait a little bit. Perhaps I could have entered after this week here. The second, even if I was not stopped out, the second problem on this trade was the stop loss management. So I was supposed to be a little bit more generous. This is still a 3.2 hour trade, so to protect a little bit my stop loss a little bit better comparing to this low. Again, I was not stopped because I moved the stop after this little profit here. I think I secured 0.4, but should the trade be like something like this, I would have been able to secure much more at around 3R. The other problem of this is that now that I'm recording this video, and because of my journal, this is the second week that a PENGU trade is on my good and bad and the ugly series. So I think PENGU is extremely illiquid or crazy or kind of very strange asset to trade. So placing a 1% stop loss, as I did here in PENGU, is really a beginner mistake, because these are much volatile asset, much unpredictable asset. So a 1% stop loss is really an act that you show the market that you are willing to give them their money, because 1% stop loss in a PENGU trade, it's really nothing. You need to be a little bit more cautious, more protecting your capital, less aggressive, more conservative, and in the case I was not. So somehow I was lucky to make some little profit, but this could have been ending up as a full 1 hour loss for the reason I told you. The first one, the timing; the second, the stop loss; and the third, the fact that trading PENGU is a very dangerous endeavor. So the bad for this week is this PENGU long that could have been stopped out. The third one for this week, the ugly, is a ENA trade. I took, and also in this trade I secure some little profit, as I wrote here, something around 0.4 but I think this trade was not properly, this is the P&L card of the profit I realized, but I think this trade was inside, as you see, price fully breaking down, going down, not well planned and not super well executed. The first problem, okay, is the context, as always, downtrend as most of this coin, and somehow this downtrend start to stop somewhere here, price start to go laterally and form a range. So as you know, I like to trade ranges. So I started to, I think, select range low and support a little bit to please my bias. That is a very common mistake many traders do. I also do mistakes, I'm human, because I selected this low here, that was the low that was swept around my trade. But you see that now that I see this price action is truly poor lows left behind. This low was never swept. Usually I like to trade the situation where price go like down like this, sweep everything, goes up, retest and go up, because here these are not poor lows. All the liquidity has been taken out and price then is ready to move to the other direction. In this case here you can see that price is actually doing this, leaving a lot of liquidity untapped. I try to long somewhere here, but actually then the price is coming down to take all these unswept lows. Exactly as you can see that happen here. So somehow wrong bias judgment and also wrong level selection. If we go in further details, I saw, as I was saying, this little sweep of this low. Now we go a little bit on detail. Luckily, I waited for this low time frame market structure break, and I think is what I wrote here. Yes, this was the setup. I waited for the market structure break. I put my order there. There was some other component with indicator, but not really relevant. So I waited for this market structure break. I put my order here in this demand form before the market structure break. We had here 0.75 and the demand area. Luckily also here we got this little bounce. I was able to take some profit at around 1 hour and at the first trouble area, move immediately, stop loss at break even, and once again, being so aggressive, I saved my ass before taking the full stop loss. So as I explained, this ENA long for me this week was the ugly, because it's even worse than PENGU, because the bias, the selection of level and the high time frame evaluation of this trade was really wrong. I saved my ass and made this little profit, but this could have been a disastrous trade, because I was trading basically a not relevant level. So as always, if you enjoy this content, make sure to trade with me on Bluefin. You will find the referral link on the description below, so you will be able to join Bluefin with a 20% discount on trading fees, and you will be eligible to participate to all the campaign we run with the team. And also you will be able to trade in a very cool exchange, non-KYC. You don't need to share any personal information to trade on Bluefin, just in an email address with a lot of liquidity and a super cool interface. So time for the summary for this episode of The Good, The Bad and The Ugly. The good trade for this week was FARTCOIN, where I had, let's say, the tips, very good reading of the high time frame, very good reading of the level of interest, very good patient on waiting the second time, this final breakdown, very smooth execution, even though everybody was saying that FARTCOIN looks strong, but whenever I see this sort of resistance level doing their job, for me is a very good and simple go signal for a trade. So respect resistance, respect market structure. In this case, resistance was doing its job was resisting the price, market structure switched, price start to find acceptance back below this resistance level, and finally the trade went into fruition. So the takeaway: cut all the noise, don't care about anybody else, respect resistance, respect market structure, and take the trade according to your system and your style. The good for this week was this FARTCOIN trade. The bad for this week was this PENGU trade. Few tips and takeaways. First, be careful to trade before a New York opening or session opening. Be careful to trade when there are news events. Second tips, be very careful, especially on this unpredictable, very volatile, illiquid asset with the stop loss management. A 1% stop loss in a PENGU trade, it's really a rookie mistake. So be more careful about news, events, and market opening, especially in New York, and be more conservative on stop loss placement. The ugly for this week was this ENA long. Here the tips and the takeaway: try not to be influenced by your bias when you select the level. The way I selected this level on a time frame, it's very stupid in inside. The proper level was probably here that you see broken, retested, and price goes down again. Do not make business on irrelevant level on the chart just to please and fit your bias. This is the major problem of this trade, especially when you are counter trending a night time frame, very clear, super clear downtrend like the one we have in ENA. Here probably I didn't cut the noise, the timeline was bullish, everybody was saying we are so back, so normal to fail on this trap time by time. Is very important to journal review as we are doing here to make sure we don't make these mistakes again. I think is everything for this week. We had our good trade, the FARTCOIN short, we had our bad trade, the PENGU long, and we had our ugly trade, the ENA long. As always, if you enjoy this content, make sure to leave a comment and a like, and to be subscribed to the channel so you will not miss the next episode of the good, the bad, and the ugly, and all the other content that I'm posting. And also make sure to trade with me on Bluefin. You will find the referral link on the description below to enjoy a 20% discount lifetime on trading fees, and to be eligible to participate on all the cool campaign we run with the Bluefin team. I think is everything for today. I wish you a very good, happy holidays for New Year and Christmas, and we'll see you in the next one. Stay safe. Bye.